high level as well, and Nifty has hit its record high levels on an intraday basis. Yes, it's at a record high level, and that's bulls are in charge. Hiral, important factors and a very good gift in 2026.
Absolutely, record high levels is what we've achieved yet again at the start of 2026. Let's just look at the Nifty contributors, and we look at, the intraday in terms of the counters, which are firing on all engines. If we can just have
HDFC Bank, ICICI Bank, and
Reliance. I think these are the three counters which are contributing. NTPC is coming up to the radar as well, which is very interesting. Very quickly, Dipan, let me come to you. HDFC Bank, ICICI Bank, Reliance Industries, and NTPC. Top four contributing to the kind of gains that we are seeing to let Nifty hit a record high level. Dipan, your view?
Yes, sir. I think they're the big index hit heavyweights, and we are seeing a lot of money coming in. I suspect that today we may see good FI flows as well because of the large cap stocks which are doing very well. And HDFC, ICICI Bank have been underperforming for the past several years or so, and they're playing a bit of a catch up. I think the issues around them are well behind. And when you have the economy doing well, then credit growth should do well, and that will benefit large banks.
All right, Kunal, now of course Nifty has hit its record high levels, and I just want to get the technical view of this entire space for the Nifty key levels. Now of course these levels will change. Which levels it's looking at? Give me a positional setup kind of levels as well. Kunal.
Yeah, so as we discussed at the start of the show, what we are expecting 26,700 on the upside for the Nifty index in the very short term. And if you ask for a very longer term view, I think we are ready to head towards 28,000 for the Nifty index. So 26,700 is what I'll be looking from a short term perspective. On the lower end, now 26,100 is the support for the markets. So I think still 200 points downside is the support, and you still have from your 500 points upside left for the Nifty index. So still one can go long at the current levels and play the entire move on the upside.
Okay. There is a strength in the markets coming in, but also the broader indices, they are also doing well. Let's just pull up the mid-cap and the small-cap indices as well. The Nifty mid-cap index, how they are doing, and Nifty small-cap. They are also showing a very strong momentum in the markets. And also apart from this, let's just pull up the Nifty constituents to give you the entire picture of where the action is, and it's looking really wonderful. All across the sectors, we are seeing a sea of green taking place. And Somit, interestingly, the setup is looking like it'll sustain. I just want to get you in on the HDFC Bank and Reliance. The strength is actually coming in.
Well, yes, we are seeing, in fact, both the counters, specifically HDFC Bank has been an underperformer. And given this uptrend has started, so this could sustain in HDFC Bank. And when it comes to Reliance Industries, there have been multiple broking firm notes also which are quite bullish on the counter. In fact, Morgan Stanley came out with this note where they're seeing multiple triggers that could come in for Reliance Industries in 2026. They have maintained their overtreating, the target price is over 1800. So they're also quite bullish when it comes to Reliance Industries. But apart from that, the strength that we are seeing largely when it comes to NTPC and Coal India is something that was unexpected, and that is something been supporting the market. ITC, yes, it has been an underperformer for the last two trading sessions, and if ITC would not have been an underperformer, yes, the market would have touched their all-time high anytime soon. Apart from that, largely Reliance Industries, ICICI, NTPC and Coal India are the gainers that we are seeing largely on trade today.
Absolutely. The contribution coming in from banks is very strong, as Somit is mentioning. ITC, Kotak, Axis, Shriram Finance, these are few of the ones which are putting some bit of pressure. We have Pankaj Murarka as well. Dipan is already with us. Pankaj, welcome to the show. Record high levels hit yet again after the 1st of December. Where from here on?
Well, I think Indian markets have been in a secular bull market. I was just doing my year-end note, and what I realized is now 10 years in a row, Indian markets have given positive returns every year. So, and last year gone by is a pretty decent year with Nifty returning about 10% returns. I think we're coming to a stage where we're coming out of slow earnings growth, where earnings growth is going to accelerate from here on. So I think markets are poised for a mid-teens kind of a returns going into this year. So from here on higher.
So from here on the trajectory is looking high. Pankaj, you have banking majors like HDFC Bank, ICICI Bank, as well as Reliance Industries, which is contributing to the kind of gains that we are seeing in today's session. How would you look at them? Do you think it's going to be the banking majors who will continue to, get this uptrend high?
Well, so we continue to remain positive on banks. We like banks, and I think I also believe that this is going to be a year where foreign flows will come back to India as the world gets into a reverse AI trade. Last year, India has seen outflows because all through last year, all the equity flows have gone into AI companies and countries which have AI stories, and India does not have a AI story. So now that the AI trade reverses this year, which is what my expectation is, India should start getting foreign flows back. And as foreigners or external money comes to India, I think first they will buy the large cap heavyweights, and so which is where I think more money flowing into banks and some of these larger heavyweights, including Reliance.
But Pankaj, what is your view when it comes to specifically the auto? In fact, the Nifty auto index also is at a record high. Similarly, Nifty metal index has been on an uptrend for the last one and a half month. So, how are you looking at both these indices and the stocks that are part of it?
So the view on auto continues to remain positive, and that's primarily because we saw the December monthly sales which came out yesterday were pretty healthy. So post GST cut, we had a very sharp sales rebound in automotive sector, but that sales momentum has sustained, is what we can figure out from the December numbers. Maruti sales were up 27%, and likewise two-wheeler sales were pretty healthy. So I think there's a lot of latent demand because auto as a sector is coming out of almost 3 years of very sluggish demand. So what it effectively tells us is that the demand rebound that we saw post GST cut was not one-off, and there's a latent demand that exists, and which is what is playing out and will play out during the course of the year. So the outlook on auto continues to remain positive. On metals, I think it's a rub-off effect of the fact that the government did extend duty protection to steel industry, and aluminum prices have been holding pretty well. So again, metal companies have been a beneficiary of that.
Pankaj, another query here, the Sharad this side, especially the mid caps and the small caps. The 2025 was of course not a year for small caps as well, but at least for mid caps, is 2026 showing some signs of hope because there are some beaten down quality companies as well, or the idea is to still stick to the large caps for 2026?
My view is that investors will have to be very selective in mid and small cap. While mid caps will deliver returns, but yet I think that not all mid caps will make money. So it will be more stock specific when it comes to mid and small cap, because while a lot of these quality companies have corrected and probably are at attractive valuations, but there are equal number of mid and small cap companies where valuations are still very rich or far ahead of fundamentals. So I think investors should be very careful. At the broader level, I still think that going into CY26, the large cap index will outperform the mid and small cap index as it happened in CY25.
Interesting, Pankaj. Stay with us. Deepan, what would you have to say? Because everyone is looking at a bottoms-up approach when it comes to the broader markets. Anticipation was that earnings will improve and there could be a good buying opportunity and, a wealth creation opportunity in the broader markets as well. Would you still say that it's best to be with the large caps in this kind of a rally, or in this kind of a market, it's going to be the broader markets which will play catch-up?
I think that small mid-cap stocks can have a revival in 2026. And of course, there have to be stock-specific, selective, look for companies which have a nice innovative business model, good corporate governance standards, reasonable valuations. All those typical check boxes have to be marked. But broadly, I think that small mid-cap stocks should drive the growth returns in 2026. The essential problem with large caps is that amongst the Nifty 50 stocks, there are only a handful of stocks, maybe 10, 12 stocks, which can show consistent growth in excess of, say, 12, 13% or so. The rest of them are in flat territory. But look, I think it doesn't matter whether it's large cap, small cap. I think going to be a great year for equities. And some of the sectors, I think, which have been underperforming, they may come back into reckoning, like software services. I think if the rupee is depreciated and if there's a trade deal with US, then I certainly feel the prospects and sentiment in both pharma and software should improve. And software service companies have very high weightage in Sensex Nifty. So that could drive the Sensex Nifty returns as well. So I think that across the board, I think it's important for investors to remain more or less fully invested within the equity market. And after many quarters of underperformance, negative returns, especially in small mid-cap stocks and individual portfolios, 2026 may be a good year.
Pankaj, I would like to get you on this. We are speaking about some sectors, after 3 to 4 months, these sectors have actually come up. I'm talking about the cement, the power segment, some infra names, and even the capital goods segment as well. Now, when these sectors move, generally they move in tandem, historically speaking. But Pankaj, in case you had to pick up something like a cement, something in infra, or maybe in capital goods, what would that be?
Well, I think the outlook for power sector going into this year is much better than last year because last year, calendar year CY25, you see, power demand had moderated significantly at just about 4% growth for the full year. But now we are looking at about high single-digit growth this year. Likewise, when you talk about cement as a sector, is coming out of a fair bit of consolidation because cement as a sector has underperformed in the last 12 months. But now with improving demand environment and some price hike already expected in January, probably we should see improved prospects for cement industry as well. One thing I really want to highlight is that I think this year is going to be year of stock pickers. So within sectors, we'll see significant divergence in performance of stocks. So while broader trends are important, but eventually what will make money for investors is buying the right stock because stocks within sectors will show significant divergence.
Kunal, from you, just wanted to understand, in past also we have seen this trend coming in, that whenever in fact in the recent past we have seen this trend coming in. So what is that technical factor that is making you believe that this time the gains that we are seeing will sustain and Nifty could see more upside from the current levels? And if yes, what is that target that you're giving for the next 1 month or for the January series for Nifty?
I think as I discussed, 26,700 is what I'm expecting for the January series. That's my first target on the upside. And positionally, we expect Nifty to go towards 28,000 on the upside in the next probably say 3 to 4 months. So I think overall the setup is bullish. 25,700 was the make or break level for the markets. We are able to hold that successfully, and now we are seeing the broader market participation also coming in. So the view continues to remain bullish on the indices, even for the Bank Nifty. 61,000 looks as a medium-term target for the Bank Nifty index.
Okay, so that's with regards to, the levels that you're tracking. Pankaj, before we let you go, a quick view in terms of IT as well, because usually the expectation now is that if the FIs are also going to come back, your BFSI and IT space will be in focus, but IT has not seen a good run yet. Would you be a buyer?
100%. Hold your breath. This year is going to be a year of IT.